Hey, good morning. Let's go over today's trade plan. So in the overnight session, the buy side has been dominant, but short term, our bias continues to be neutral because the market is still in a fairly balanced state on the larger time frame. Heading into the open, we have pre-market resistance at 29.5 to 30.5. If the buy side continues to be active and aggressive, then we could see a break above that area for a test of the 33.5 to 35.5 area. That's really the main resistance zone on the day. And beyond that, the next major zone is 43.75 to 45.75, but we do have these resistance levels along the way at 39.5, 41 quarter, and 42 quarter. And as we head higher beyond 33 half to 35 half, the market would start to exhaust the range potential on the day. So the reward to risk beyond the initial resistance zone is very questionable. And for that reason, even if on the smaller time frames the market does poke above the 33 half to 35 half, it doesn't necessarily mean that the move is going to be sustainable. So we have to look at the market in real time and see whether there is sufficient underlying momentum to justify holding above initial resistance, even if the market does test above that area, because there's not going to be much range left on the day beyond the 33 half to 35 half zone. And given that our bias is neutral, the market is stuck in a range, in a balance, it's risky to initiate at a very high price. On the downside, we have pre-market support at 22 half to 24 half, and holding above that area tells us that the buyers are still fairly aggressive and fairly active. A break below 22 half to 24 half would be the first signal that sellers are starting to step back in. Below that, we have the previous VPOC at 2075. We have support at 1875, followed by 14 quarter to 16 quarter, which marks the overnight low. And then below that, we have Friday's low at 12 half, and then the larger time frame support at 0775 to 1075. Now, if the market gets exhausted into 1875 or the initial support zone or 0775 to 1075, we can expect responsive buyers to be active in the market given that the overnight session has been fairly bullish. And again, short term, our bias is still neutral because the market is still stuck in a range. So if the market gets oversold or exhausted into an area of support, on the smaller time frames, we can still expect responsive buyers to be active. But overall, we just want to exercise caution and be a little bit more conservative because the market is still very much balanced on the larger time frame. It's stuck in a trading range, and when you are so range bound, you want to make sure that you're not initiating trades at poor trade location where you can get stopped out just based on some short-term chop. So in this environment, as we head into the U.S. election, which is just a little over a week from now, it's better to be more selective and lean on the side of caution. And if that means skipping a particular trade where you're not able to get in at somewhat decent location, then that's okay. Because getting in from poor trade location means that you're at a higher risk of getting stopped out. And even if you don't get stopped out, if the market continues to chop and be very balanced, then there may not really be sufficient reward to risk in that trade idea anyway, or you simply may not have the patience to actually see that trade through. So, given that we are very balanced and very range bound, it's best to exercise a little more caution, be very aware of your trade entry. Are you getting in at a good price? Is it a price that's going to allow you to sit through some chop? And does it have sufficient reward to risk to really warrant the entry in the first place? So those are really the main ideas heading into the open. Let's see how ES responds to 29.5 to 30.5, whether it's able to take it out. That would confirm the overnight bullishness and bring 33.5 to 35.5 into play. That's still an important inflection point. And then if we take that out on the upside, even though we could head a little bit higher, the risk reward is not really going to be favoring the buy side beyond initial resistance. And on the downside, if we really start breaking down, the most aggressive area of support is 22.5 to 24.5, but we could quite easily test lower within the range at 1875 and 14 quarter to 16 quarter, with potential to even test lower if there is sufficient broad market weakness and downside momentum. So those are the main thoughts. Let's see whether the sell side steps in at resistance here, and we'll take it from there.